To some losses, down about 1.7% right now down more than 5% on the week. What's the biggest takeaway from Nvidia now that they've reported earnings? We got the guidance in terms of Blackwell. We've seen kind of the stock market reaction. What's the biggest takeaway?
Well, like Nvidia's obviously been had been surging like year to date up enormously still, and run by like very real secular growth from its leadership like in artificial intelligence hardware and software. So there's obvious reasons why it's been surging. A lot of that around, as with electric vehicles, AI has also become a thematically very popular stock. So for investors to pay attention to. So it's been driven up by a lot of enthusiasm.
In 2023 and 2024, Nvidia was without a doubt among the top artificial intelligence, AI, stocks to purchase. The question now becomes, is it the best AI stock for 2025? 2025 is almost here. Since it requires me to make future predictions, I am unable to respond to this question. Nonetheless, I believe that some important details regarding Nvidia's operations may affect whether or not it ranks as the top AI stock in 2025. What initially makes Nvidia the top in AI? Easy. Many AI models are powered by its top-tier graphics processing units, GPUs. The ability of GPUs to perform hundreds of calculations in parallel gives them an advantage over conventional computing techniques. Moreover, clusters of thousands of GPUs can be assembled to produce remarkable computing power. AI models will need more processing power to develop as they get more complex. For instance, Llama, a generative AI model from Meta Platforms, is presently in its 3.1 release stage. Although Llama 4 is being developed, it will need 10 times as much processing power as the Llama 3 model. This issue is not specific to Meta. All AI-savvy companies continue to significantly increase their AI compute capacity, which greatly benefits Nvidia. It's no surprise that a number of large tech firms, including Meta and its competitors, have already talked about raising capital expenditures for AI computer power in 2025. The demand for Nvidia will therefore continue to rise in 2025, at the very least. Since Nvidia has already factored in a great deal of success, this is vital. Nvidia is currently the most costly it has ever been, despite the fact that it has rarely looked inexpensive during its 2-year existence. The company is priced using the earnings from the upcoming fiscal year in this price-to-1-year forward earnings ratio chart. Since Nvidia has never been this costly in its existence, it still has great hopes for the upcoming year. Even though Nvidia's management hasn't released official guidance for FY 2026, experts on Wall Street are already speculating about it. An average of 59 analysts project revenue of $193 billion for FY 2026, which would represent a 49% increase in revenue. Given how much Nvidia's revenue increased in 2023 and 2024, that is still very outstanding. However, is that sufficient to support the highest price Nvidia has ever charged? Depending on your predictions for 2026, that is. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
We're seeing this is again can be tied very much to the question of tariffs, the risk of trade war. So again, rising political tensions between the U.S. and China it will naturally be a source of rising concern for a company that's a critical hub for semiconductor supply chains, and those things pose a risk for Nvidia. Any disruptions due to trade restrictions, export controls, or sanctions on chip technology could severely affect production and supply, and that can make investors very wary. And given the amount of inflationary enthusiasm that's happened with the stock, it could crash down back to earth pretty easily. So the current retreat is very much not a rout or immediate cause for concern, but there's no doubt that Nvidia stock is up far beyond what its revenues and like growth projections and its guidance would suggest. But looking toward that sort of longer term view, like, it is important to recognize like China's long-standing ambition to bring Taiwan back within its sphere of control and influence, and like China's horizon for opportunity for such a move it may close within the next decade or so. That makes this situation potentially fraught, especially when we're talking about a new administration that has made part of its signature foreign policy a ratcheting up of conflict and opposition to Chinese revanchism in Southeast Asia. I think we also have to like watch closely, like as works on its like own reindustrialization, like reshoring strategy, and like critical manufacturing components and like supply chains. These are all things that will affect like Nvidia going forward. But from like a purely trading standpoint, it is it's not surprising that the market would take a breath after an incredible year followed by post-election market euphoria to an extent, but the falling back because of obviously exposed in ways that a lot of places that many other companies aren't, and in a region that is particularly vulnerable.
Since the chipmaker released its third quarter results report last week, Nvidia's profits have declined. This is what took place. The stock has experienced some post-earnings reactions, according to analysts. Nvidia announced remarkable quarterly sales of $35 billion, representing a 94% increase from the previous year. Because of the strong demand for AI, its data center business expanded even more quickly, rising 112%. In addition to providing a strong prognosis for the current quarter, the company's net earnings increased to $20 billion, somewhat above Wall Street's estimates. The figures suggest that some profit-taking may have caused the stock's first declines. The stock has, after all, nearly tripled this year. On the other hand, the outlook was favorable but not outstanding. According to LSEG compiled data, the company's fourth quarter revenue prediction was $37.5 billion, plus or minus 2%, while analysts' average estimate was $37.09 billion. Even if the growth rate is still impressive, it is obviously slower than in prior quarters, in contrast to the 265% yearly growth in the same period last year. The fourth quarter forecast shows year-to-year growth of almost 70% from a year earlier. In the quarter ending October 27, revenue increased 94% on an annual basis. Nonetheless, this represents a downturn after sales increased 122%, 262%, and 265% in the preceding three quarters. These post-earnings emotions are exacerbated by market speculation about a possible trade war with China. Donald Trump, the president-elect, announced on November 25 that he would impose high tariffs on imports from Canada, Mexico, and China on his first day in office. According to Reuters, Trump, who will into office on January 20, separately proposed an additional 10% tariff above any additional tariffs on Chinese goods. In a note to clients, Stacy Raskin, an analyst at Bernstein Research who focuses on Nvidia and the semiconductor sector, stated, "If these new tariffs are implemented, they will have very little direct effect on semiconductors because there are very few imports of raw semiconductors into the United States from these impacted nations." However, he added that escalation is still the bigger possible concern since, should the incoming administration feel so inclined, the total amount of semiconductor imports from all nations may be significant enough to be impacted by more extensive measures. When questioned about the possible tariffs and how they might affect Nvidia, CEO Jensen Huang stated that the business will fully abide by any regulations that are put in place. Although it's unclear exactly how the tariffs will affect Nvidia, new taxes would undoubtedly increase trade barriers and probably pose issues for the company's supply chain. In addition to these problems, Dell Technologies, DELL, a significant partner and customer of Nvidia, is seeing a significant decline in its stock price following its earnings announcement on Tuesday, November 26. Dell predicts lower server sales for the fourth quarter despite record-high server orders because enterprise clients are holding off on purchasing new systems that use Nvidia Corp's next-generation Blackwell graphics processing unit processors. They are moving to later orders as a result, which suggests that some of them won't be represented in the current quarter. Early next year is when Nvidia's next-generation Blackwell chips will be available for purchase. Finally, as traders seem to be winding down before the Thanksgiving break, Nvidia's stock dip may have been partially caused by a decrease in trading activity. Here, our research director offered his thoughts on Nvidia's financial performance. He believes that in 3 months, Nvidia's stock might hit $170. Although we see Nvidia's potential as an investment, we are convinced that some AI stocks have a better chance of producing larger returns in a shorter amount of time. Check out our research on the cheapest AI stocks if you're searching for a more promising AI stock than Nvidia that is trading at less than 5 times its earnings. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts. So hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
So is how big is this breath going to be, and what happens once traders take this breath? Is this a name you think is poised to continue to run higher into next year, given the fact that it is so far ahead of the competition, but it's up 170% year to date? So all of that being said, is this a name that can continue to run higher?
For a time, I believe it can. It is there's reason to believe that the overall sentiment and just the secular demand growth for a key technology that it is, as you said, very much out in front of, and the undisputed leader in. Those are obviously going to be tailwinds, but so I expect that to continue. But traders should watch out for some pullback as the sort of Trump tariffs take form. And that sort of becomes the biggest short-term potential headwind if China responds in kind. So it makes sense that it's sort of taking a pause. I think regardless of what happens, there's still room for it to benefit from its market leadership position. But looking towards like the second half of 2025, I would say that's where the bigger picture questions are going to start to be more front and center.
Nvidia just revealed yet another impressive quarter. The leading artificial intelligence, AI, business posted record quarterly sales of $35.1 billion for the period ending October 27, after advising investors to expect revenue in its fiscal 2025 third quarter to be around $32.5 billion. On the other hand, as AI capital spending keeps increasing, exceeding expectations has become the norm. Another significant quarter was previously anticipated by analysts. Nvidia's stock indicates a high likelihood of future success. Even though Nvidia CEO Jensen Huang made some extremely optimistic remarks during the earnings conference call, the company's shares have fallen by roughly 7% following the fiscal third quarter report. Investors should be particularly eager to purchase Nvidia stock, however, because of remarks he made the week prior to the company's earnings announcement. On November 12, while attending an AI meeting in Japan, Huang presented a vision for the future that makes it evident to investors why it's still possible to own Nvidia stock. Huang responded to inquiries about manufacturing and quality-related concerns with its most recent Blackwell AI architecture during the November 20 results call. For Nvidia to succeed in the upcoming year, Blackwell's success is essential. Huang gave some excellent news in that regard. Production at Blackwell is booming. In actuality, we will deliver more Blackwells this quarter than we had anticipated. In actuality, demand is higher than supply. However, Huang outlined how widespread he anticipates Blackwell and Nvidia's other AI-related platforms to be the week before, while attending an AI meeting in Japan with SoftBank CEO Masayoshi Son. Son and Huang have been together in the past. Indeed, during the fireside conversation, Huang half-jokingly said that Son wanted to lend me money to buy Nvidia, all of it. He said, "Son, now I regret not taking you up," and added, "That was a great idea." According to Sun, the offer was made in 2016, not long after SoftBank paid $32 billion to purchase semiconductor chip manufacturer ARM Holdings. Since going public again in 2023, SoftBank has retained a 90% stake in ARM. At the conference, the CEO of Nvidia revealed something much more significant. He declared, "Today, we are bringing and building an AI infrastructure for Japan in partnership with SoftBank. Together, we will use NVIDIA DGX to construct the biggest AI factory in Japan. The company's AI enterprise platform is called NVIDIA DGX. According to the company, it is their software, infrastructure, and expertise in a modern, unified AI development solution. In essence, it is the corporate platform where AI and real-world applications collide. In order to give its telecommunications network intelligence beyond phone, data, and video, SoftBank will include NVIDIA technology. It will be dispersed throughout Japan's 200,000 SoftBank locations. It intends to open an AI store so that 55 million SoftBank customers can access AI. Everything based on the AI enterprise of NVIDIA. An AI grid that spans Japan will be the end outcome." Wang referred to it as utterly groundbreaking. According to him, this is the first attempt to turn the communications and telecoms networks into AI networks. This is an illustration of how NVIDIA's company can continue to grow. There are countless applications, from assisting in the management and control of a network of self-driving automobiles to providing customer service. Wang gave an illustration of how cameras and massive language models may turn entire factories into AI systems. Managers can discuss current events, any unusual activity at the site, any accidents that may have occurred, or just to obtain daily updates from the factory. Other tangible items like a road, a stadium, an office, or a building could also be included in the idea. The possible profits from enterprise AI should be taken into consideration by investors who are unsure if NVIDIA's stock has already risen too high. This subsequent stage has already begun. During the quarterly call, NVIDIA CFO Colette Kress informed investors that the company has sent its first engineering prototypes of Blackwell DGX to OpenAI, a company that develops artificial intelligence. It makes sense that Wang feels optimistic about the future of his business. These collaborative AI projects will only continue to expand. NVIDIA should be included in any investor's portfolio that contains a growth component. As always, sharing your thoughts and insights in the comments section can foster a more informed community discussion, helping everyone navigate the complexities of investing in this dynamic sector. Stay ahead of the game with the latest stock market news, data, and important updates. I share valuable insights and real-time information on my Telegram channel, ensuring you're always informed before everyone else. If you want to keep up with the fast-paced world of investing, open the description below, click the link to my Telegram channel, and join our growing community.